The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host that loves to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
So, well, we had a kind of a dip overnight, was expecting it. It didn't last very long. The fire hose of cash. It's not helicopter, just intimates that it flows down and kind of flies around this way and that way. Helicopter Ben, as they used to call him, that was it. He had cash and he'd throw it out, but it kind of went with the wind and it flew and it kind of had kind of a organic movement to it. I think the better description is fire hose of cash. It's coming out. If you get hit by it, you're going to get knocked down. There's just so much of it from the Fed that you can't really keep the market lower. I do think that probably the bulk of the moves by the top 5 or 10 stocks that end up being 25% of the entire market are probably, they have a lot, let me put it that way, they have a lot in them, and probably diminishing returns, probably the best way. Maybe they go up a little bit. Apple from options looks like it could pop to 340, 345. I was rather bearish on it. I didn't look at it, what it was the last 5 minutes ago. 325.62, although it was 328 at the close yesterday. So there's a lot going on here, but in these, and in fact, we can talk about it. I kind of intimated a bit about it yesterday, and that is the overwhelming euphoria that the market has because of the Fed cash. Anytime there's a little brush fire, we're not talking about, or even the size of everything on fire in Australia. The Fed has a fire hose for that too. Doesn't matter. They're going to go after it and put it out, and they're not going to even let it go overnight. They're going to hit it as they did Sunday night and last night too, when we started seeing some stuff. The option market makers think we go to 34.20-ish so far. That's what they bet yesterday. We had some extremely bullish numbers on the put-call ratio, ridiculously low in my opinion. And of course, I'd kind of been looking for a little bit of a pullback, but that's about all you're going to get. Is as soon as you get that chance of a pullback, that's it. So as we start the show off, we're basically flat on the S&P after being down, about maybe at the lows, maybe 30 points or so. Dow's down, still down 37, 38. NASDAQ's up 14. We got a couple of heavy hitters after the bell tonight, and I don't think that much tomorrow morning. Let me, just so I say it right. After the bell tolls for the Roku, Yelp. Oh, we had another big one here. NVIDIA. And NVIDIA is the one I did want to talk about today. What do we got? Let's pull up the chart. Just because I follow NVIDIA, because it's kind of the core of a lot of the work that I do with machine learning. And, it's gone up. It really hasn't backed off. I don't know if it's priced for perfection, but their numbers are going to be good. The question is, are they good enough for the price? I can't answer that, but these guys have cleaned up on the video card business. They are head and shoulders above AMD. They had a wicked good Christmas. for everything I could see. No, almost no in the no way, did he say? The almost no ads whatsoever discounting the projects. I think I've had a stroke. Products as far as even after Christmas. Generally, there's a lot of after Christmas sales and kind of stuff like that. I ended up buying, 4 of them through Christmas. And it was hard to get them. So although there were lots of ads for the AMD ones, so I'm suspecting they're doing very well. In games, AMD has one big problem, and that is that their drivers for those games are horrifically bad. Whoever was in the charge of that, I'm sure, has been fired by now, but the echoes of that continue on. Not only the cards better, a lot of the drivers for specific games are unusable in AMD from what the influencers say on YouTube. So earnings are going to be good. I don't know how the stock's going to react. Options actually show that this thing could go down 30 points or up to $320. No one else has a real idea either. Expedia after the bell, Mattel, Yamana Gold, GoDaddy, Mohawk Industries, a few of the ones that make me think that we'll know a lot more after they report tonight and going into Friday tomorrow. You can give me a call, 877-927-6648. You can email me at path@tfnn.com. And, of course, you can always put a message in the den. As I said, I gave up on being short yesterday. Did go long today. Have a nice bounce in it. And I talked a little bit about it yesterday, and that is being. Oh, what do we have? We lost a video. Well, video killed the radio star. Don't we know that? So we have to look at it. Yes, you did lose video. I am unsure why. Okay. If I turn it off, turn it back on. Maybe we got it now. Yeah. I just clicked on it for whatever reason. It decided to go away. Okay, so on this. What I was going to say is that most of the money it's probably in these big cap stocks. I would assume that a great deal of it's now going to spread to the second level stocks, as most people probably look at putting more money in a lot of these big ones. Apple probably the outlier, but people trying to throw more money at Microsoft, only making it more expensive, I think is problematic. Start looking at the mid caps and, of course, the ones that are less than mid cappy, the small caps, because I think that's where the big cash can be. We'll be back in a minute.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
As I said before the break, I'm kind of looking at a lot of these stocks. You look at Microsoft today, it's up on not much, but I have a feeling a lot of people think that there's a lot of juice in those, and throwing more money at it probably not going to do a lot of good. The only reason that probably Apple looks a little higher is how many people are short this thing. As long as it kind of stays around this level, it'll probably just creep higher. You're going to need a fairly decent amount of bad news to get this to break. It had that opportunity, and it reversed itself yesterday. Now it's just kind of going sideways. But, you know, they've got, $300 billion in cash. Maybe they'll just hold it up for a while. Pattern really looked bearish into yesterday, but you got the reversal. Anyway, first question of the day is, what do I think of Tesla doing this thing? And I'm telling you that generally when you have action like this, you're going to see it creep into other stocks. This is extreme risk-taking. And, of course, I'm going to dilute our stock, so we're going to shoot it up $40. That kind of thinking is absolutely insane. But at the same time, remember these guys that are running this stock operation. And if you haven't ever read Jesse Livermore's book, Reminiscences of a Stock Operator, you got to really understand how when you get the kind of perfect stock like this that everybody knows is worth a whole lot less, you can game it for a fairly long time. I mean, even Enron was a horrible fraud, along with Bernie Madoff. You can keep these things going a lot more and a lot longer than anybody ever thought they could. But what do? You probably announce that there's a bunch of shares coming into market, and you do the same thing you did a couple weeks ago, which is you put a bunch of shares back into your margin account, let everybody buy them, and probably called the broker this morning and said, I'm moving them right back out of the margin account and create yet another short squeeze. It's just that easy when you have all the right conditions as you do in Tesla. But what I'm going to tell you is that this is bringing in the gamblers, and you're going to see that kind of gambling move down from the largest caps like Tesla back down to the mid caps and small caps. So don't be surprised to see companies with dubious forward earnings, but a lot of sizzle and not much stake. See some dramatic moves. Just generally after the generals come up and push the market to the highs, you end up having some fairly major risk taking downstream in those mid caps and small caps. Second question today is KGC in Kinross Gold. You know, gold is kind of going sideways, which is probably pretty good, especially with the dollar index, the way it's been running. I mean, we're at, we kind of hit, almost hit 99 on the dollar index. We're at 98,968. If these can kind of hold up and go sideways until you hit 100, as soon as it probably starts coming off 100, you'll probably see the breakout in gold. I don't see a lot of reasons to be in it right now, but if you see a sharp break in the dollar, I think that would be an issue. I think the dollar is telling us that people are fleeing China and taking their cash, and the cash that China's dumping in, and the Fed, and they're pumping it back here into the United States equity market. Eventually, this will all pass, and we'll pay for our greed one day. But, you know, it lasted an entire year in 1999, and the Fed wasn't behind it, much less the Fed's there. Now, generally, when you get a very accommodating Fed like we have now, and the problem goes away as it does in a week or so, you know, or two with the virus, let's say it burns out in 2 weeks. All this cash they put in, are they going to instantly start pulling it out as soon as the market starts going up? My guess is that it'll be 2 or 3 or 4 days, and they'll have a 1,000-point move, and it will be the cow will be out of the barn before these guys have even a chance. As bankers, they may be doing this for political reasons too, and that is, you know, we truly have somebody that believes in everything that is in the Communist Manifesto running. They may not want to give any ammunition to somebody that could possibly win and actually be that way or take away all their dollars. We're not about right or wrong. We're just about higher and lower. And at the moment, there's probably a lot of, what would you say? There's probably a lot of reason for them to believe that if the election goes against them, they will lose a whole lot of cash. And again, the Fed really represents the banks for the most part, so you have to look at that. What else do we have? Okay, do I have anything else? Okay. I've heard that the People's Bank of China actually buying into our market. They could be. Who knows? But there's a lot of cash just floating around. And, you know, eventually people will go, you know, I got all this cash, but I've just been buying the same company, Microsoft, or I've been buying Netflix, or I've been buying this. And, man, maybe I shouldn't put it all in Microsoft or Netflix or Tesla or whatever. It would be problematic. Let's see if we got anything else. Well, I haven't done any history yet, so why don't we get back to that? I got a little bit here to go.
Then it's all just a little bit of history repeating.
On this day in 1945, a series of Allied bombing raids begins against the city of Dresden, reducing the Florence of the Elbe to rubble and flames and killing roughly 25,000 people. That's actually low. They think somewhere between 35,000 and 150,000, but no one knows because there were no records. The town was flooded with people coming in, avoiding the Russians. And to a great extent, this was a way to try to push as hard as possible for somebody somewhere in the German government to offer a unconditional surrender. But, of course, it went into May. More than interesting, well, maybe I'll talk about this later, but been listening to an audiobook about POWs, German POWs that served on the first day on D-Day. Very interesting there's probably 34 of them in this book, to get their view on the other side of a huge amount of American production coming to them at very high speeds from the air. We'll be back in a minute.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And I guess we'll get back to the market here, although I'll bring up the book maybe another day when the news pops up. But it's very interesting to listen to all these Germans talking about being on the Atlantic Wall and seeing literally a never-ending stream of two-engine single-seat style bombers come at them and fire at them basically all day long. And them being the one out of 100 people that lived. And it was very interesting because this guy that was a writer for propaganda, he was the propaganda writer for the Nazi, it was kind of like Stars and Stripes, probably the best way to describe it. Ended up going out and interviewing all these guys like 2 weeks before D-Day, and then he tried to find as many of those folks that he could again later. And of course, there were like out of the thousands he talked to, he found like 37 of them that were still alive. And this is in 1955, so they got to look at it a little bit later. But very interesting stuff. Okay, question for Ken Ross. I think I answered this. You have a bounce. You got some decent volume in it today, but it's kind of rotating. I think this thing's winding up, but I think it's going to be next week. Let's take a quick look at the XLE. Yeah, I still think that what you want is a pullback like under 54, and then the next thrust will probably go back higher, maybe to 56. But just a guess at the moment. But I think you probably have a little bit more weakness on that dollar strength. I think gold and crude both are underperforming right now because of that dollar. So you hit 100, it rings the bell. If that's going to be the high, then that's probably the time to buy gold and buy crude and other commodities once it starts retracing. What else do we have here? Okay, we'll look at the usual suspects first. Netflix is up to the previous high. Volume's light. In fact, we got a lot of these stocks that are light. But as I said yesterday, the volume did kind of come in late in the day. But again, that is as these stocks reach previous highs with light volume. You got 3.3 million shares compared to the 7 million share on July 9th in Netflix and the 10 million share high on May 1st. These are probably running out of steam. They may hang around here. I'm not saying pull it short, but my guess is the next row is into more medium cap and small cap names that have not run heretofore. I haven't used heretofore in a while. Okay. Let's go back to some other stuff here. In fact, let's talk a little bit about volume. We've got about 4.3 million shares right now. So we're a little underperforming yesterday, but not by much. My guess is, like I said, we're probably going to have some level of consolidation. Yesterday, the option market makers went delta neutral. They are fairly bullish up to 34.20, which is not that far. That's like one day. I suspect that since the big stocks move the S&P and NASDAQ, that what we're going to have is kind of a slow melt up into next Friday's expiration, where the mid caps, though, and the small caps that really don't add a lot to those index numbers are going to be the big movers. At least to this point in the day, I'm right, at least for the stock that I bought. So what else do we have? Last night, the new numbers for short selling, the bi-monthly numbers came out. I'm still sifting through those today. But there's a handful of stocks out there with some fairly huge numbers. Again, like going into Christmas, the last thing you want to be doing as the markets go sideways generally is be short. Maybe we go up there and ring the bell at 34.20 or something, and that's it. But my guess is that when you see the kind of gambling that is inherent in Tesla, that's going to move out into other of these stocks, and you're going to want to have a quick mouse trigger in selling and just turning away or you won't be able to keep your cash. I think there will be a lot of big movers in the stock. Gold is up a little bit, even into the dollar moving higher. Take a quick look at that. Again, you can give me a call at 877-927-6648. Okay, Wayne says Apple completed its double repo pattern. It did. It closed below it, and then the next day it went higher. So that was it. So, no. And options are actually saying 340, 345-ish for Apple a week from Friday. So, it had the bearish case. But to this point, it does not matter. The Feds came and washed it all away with their fire hose of cash. So the options actually look fairly bullish. So unless something major changes, I suspect that we probably just have a slow melt up. There aren't a lot of shorts in the market, and that is problematic. If you want to be long a stock, you're probably looking for a stock that's got at least a fairly decent amount of short interest, like Tesla. And the reason is that you need that to move higher, generally when you get to these levels with diminishing returns. You need somebody to be a buyer on the other side. And generally, the only way you're going to do that after a big move like this is have shorts to be squeezed. Isn't that a red hot chili pepper song? Something my soul to squeeze? I'll have to think about it. Something like that. As we said yesterday, a lot of these stocks did kind of pop and then roll over. Micron was the one we were kind of watching yesterday. You got a little bit more of this today with a whole lot less volume. This is basically back to kind of the lows of yesterday earlier. Okay. And I don't know about that. Anyway, you got a pop. You went to the previous high. You had more volume. So Micron actually looks fairly good. Maybe it pops after NVIDIA. The other one I thought was interesting and looked very toppy yesterday. It did hold a little higher yesterday, but then reversed today was Qualcomm. But again, not a lot of juice into it at 92.44. The big thing that I think the market hasn't really thought much about is the cancellation of the World Mobile Congress, which is this big once-a-year deal for all the people involved in smartphones and cellular communications. They did cancel that last night, although I think half the people had already that were going to be vendors there had canceled. So kind of a moot point. We'll be back after this.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And still flat on the S&P cash, right? I forgot to turn that back on. Hang on a second. Let me update this to make sure. It's up 2 points. Okay. Forgot to turn on my auto update on the quotes. Okay. Interesting. Seeing anything else here? Question about what was this? David, are there any indications where the Fed will stop juicing the markets daily with billions of Fed repo? It appears markets will stay mostly green until that date. And yeah, I have a feeling that as soon as this starts going away, they'll start pulling a little of that money out. I think they're so afraid that there may be some momentum down, and that maybe a lot of these houses are built on sand, that they don't want even the hint, the thought of any kind of market moving lower. Is China involved in this? They certainly don't want any more people out of work. So are they throwing money at the problem here? I don't know, but certainly they're throwing money in China. My guess is that a lot of people don't want their cash in China and are probably taking the money that China thinks that they're using in the country and trying to get it out and using it maybe over here. I think we may have a double whammy, and there's always the unintended consequences of any kind of action like that. So problematic. I mean, the Fed really kind of started this by raising interest rates far too soon. They didn't even see an ember, and they were sure that inflation was back huge and raised rates in the fall. And they've been chasing it for a year now. So problematic at best. Give me a call at 877-927-6648. Email me at path@tfnn.com or put a message in the den. Oh, I like that saying from, oh boy, what's the name of that movie now? This is a general on the WAP talking about the computer in the Whopper. It's the Hacker movie, 1980, Broderick. What's the name of it? Oh, that'll drive me mad. War Games. Yeah, that's who it is. There it was. Okay, I got it. War Games. It comes to me. It just takes a while. I have to kind of like follow my breadcrumbs back to all those things. Okay. We looked at Qualcomm. coming back a little bit. Not a lot of juice up, not a lot of juice out. I suspect a lot of these things after this big run are going to need some level of consolidation. So again, I'm thinking over the next week, while we're probably going to go higher on the indexes, I'm looking for a lot of the second tier stocks that didn't drive us to this new high to probably start getting some love. So what else do we have? What are my options saying about Facebook? Okay. That is a good question. I just updated them before the show. And then generally I wait till at night to redo them again. Well, here's what the entire market kind of looks like. So I'll go ahead and show you. And that is there's very, very little risk in a lot of these stocks for puts and calls. Here's the way you need to read these charts, and I don't know if I talked about this before, but a lot of times you'll have what I call this kind of a big bowl pattern. But you'll have a couple of hockey stick kind of moves in here. You've got one at about 228, and then another one at about 250. But if you got one of these things that's kind of big and flat, and you're fairly close, you either want to go down to the X, which is 180, or you want to go up to the first hockey stick move, and that would be 225. 228. So you could get another $18 in Facebook. The question would be, how much do you want to put in on this because of high short interest? And that's where I'm going to say Facebook may have a little bit more than you would normally think. But 22% short on, what was it, Monday, 20% short yesterday. You've had some days that are 24, 25% short. That adds up after a while, and you really haven't had a move. You've had a lot of people shorting it. Let's put Facebook up here as a chart. I don't think you get it, but certainly with double gaps, you want to bet there. So I'd say 220. But it may just kind of stumble up into that 220. There isn't a lot of volume today. But again, a lot of people short this thing. If volume really starts kind of quieting down and we don't get much movement in the market and it ends up being more consolidation, I wouldn't be surprised to see this kind of mess around the rest of the day and tomorrow, maybe even Monday, and then start seeing a few of these start short squeezing up into the end of the week next week. Again, you got to find something that negates that. Late to show, disregard already. What do you think of NVIDIA heading into earnings? I did cover it almost instantly at the top of the show, but since it is going to be a big deal, as I said, I bought like 4 of their cards and spent thousands of dollars with them over Christmas for some of the stuff I'm working on for machine learning. And the question is, how much more of the business that they get from AMD? I think they got a lot. I also think that the lack of any kind of ads or sale prices after Christmas also tells you a great deal. I have seen a lot of ads and specials on AMD's card. I haven't seen that for NVIDIA. NVIDIA kind of confused the matter, but literally, I don't know of anybody that's got a big game machine or any machine learning that even looks at AMD. But, of course, that's the same thing now, where probably for 2 or 3 months now, I can't see anybody that looks at Intel to put a chip in their gaming rig or their other rigs. They're all looking at AMD. So AMD's excelled in the retail, consumer, and prosumer kind of game market for chips, but not done very well at all, mostly because poor drivers for the games for AMD. So I think they're going to have good earnings. The question is it already built in? How much better do they need to do than the market already thinks that they're doing? We'll be back after this.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Basil Chapman will be hosting a 90-minute live webinar for subscribers to his daily trading service, The Opening Call, Thursday, February 13th from 4 till 5:30 p.m. Basil will host his live webinar titled The Dark Cloud Cover, an Essential Market Analysis. In this 90-minute webinar, Basil will discuss the techniques he uses when identifying market downturns using his Chapman wave, including how he uses specific ETFs like the SMH Semiconductor ETF as a canary in the coal mine leading indicator when looking for market downturns. By identifying particular weaknesses in the market technicals, Basil's able to identify the severity of the market reaction, and this is just one of many topics he'll be covering. To sign up now for the opening call, visit the front page of TFNN.com. Don't miss out on this special 90-minute live webinar with Basil Chapman, Thursday, February 13th. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we go into the closing inning of the show, got Tom O'Brien in the next hour. And of course, Basil Chapman has his webinar tonight. Dark cloud cover. Sounds ominous, and it is. But check out his webinar tonight. So as we go into the home stretch, we're up 2 points on the S&P cash. Down 48 on the Dow. NASDAQ's up 14. Russell's up 6. Again, probably looking for a lot of back and fill for a handful of days. If we start seeing short interest start spiking up, then maybe that's what is going to propel us into even higher prices into options expiration. 80% of the time from yesterday's close. Am I saying that right? actually the low of yesterday, will be exceeded by next Friday. So it is fairly bullish. About 80% of the time, you need a compelling argument. And I can say the virus is a compelling argument. The downside is the Fed will not let us even have an inch to go down lower. So I don't know what you can say about it other than that. Maybe another 20 points higher in Apple. Maybe that's what we really need. It hadn't participated in several weeks. It's got huge amounts of short interest in it. Could see a big pop almost at the highs of the day now. But you could just see a couple of stocks like that with everybody else sitting around doing not a whole lot of lifting into the next week to get us back up into one leg higher. But everything from that, from the TLT, it's all telling us one thing, and that is the game's rigged. Don't find the Fed. I did. I've given up. Now I'm just going along with the stream. Just going to go along with the flow. In the meantime, sell when you can, not when you have to. We will see you here tomorrow. Same bat channel, same bat time.